guys, welcome to the Silver Report Uncut. It began with just a tiny little scrape. And I'm referring to back when Goldman, they took a scalpel, they very carefully cut their euphoric 2022 GDP forecast. The bank's Q1 and Q2 2022 GDP estimates, they were cut from 5% and 4.5%, way down to 4.5% and 4%. And they forecast a full year 2022 GDP would be 4%, down from 4.4% in their expectations previously. So what actually happened? Well, Q1 GDP was negative versus Goldman's 4.5% estimate. Q2 GDP was negative versus Goldman's 4% estimate. And the Atlanta Fed just slashed their Q3 GDP forecast to below 1%. And it looks likely it's going to push it below zero in the coming days. But don't call it a recession, of course. It's special economic operations. But please, this warning we gave out around 2021 about the GDP cut, it was 100% correct because the U.S. is now in the midst of a painful stagflation. With inflation, it's still soaring. Economic growth is sliding. And most banks, they're tripping over themselves to cut their GDP forecast monthly, if not weekly. All of those oh-so-rosy forecasts. Now we see Goldman's latest trim of their GDP estimate, which is a far cry from what the bank expected less than 1 year ago. In a note published by Goldman's Jan Hatzius, the chief economist who was dead wrong last year with his overly optimistic GDP forecasts, not to mention he was the one repeatedly calling for this transitory inflation. Now he wrote that he's raised the Fed funds rate forecast by 75 BP over the last 2 weeks, and now expects that the FOMC will hike by 75 BPS in September, 50 BPS in November, and 50 BPS in December, to reach the bank's terminal rate forecast of 4 to 4.25% interest rates by the end of 2022. Other banks, they have this rising as much as 5%, and in keeping with the Fed's stated intention of crashing the economy, Hatzius writes that this higher rates path, combined with the recent tightening in financial conditions, implies a somewhat worse outlook for growth and employment next year, unquote. So the bank is therefore slashing its GDP forecast and is still forecasting GDP growth of 1.1% to 1% in 2022, Q3 and Q4. Maybe it just has this, they can't go and predict what the real economy is going to be doing, but they can't look stupid here. They can't look ignorant. And they projected 0% GDP growth in 2022 on a Q4 to Q4 basis. In other words, total stagnation. And it now expects GDP growth for Q1 2023 to be 0.75% versus their earlier forecast of 1.25%. And previously, Q2 of 2023 was 1% versus the 1.5% that it used to be. Q4 2023 was at 1.25% versus the 1.75%, and just 1.1% growth for the full year 2023 on a Q4 to Q4 basis versus the 1.5% previously. Following these changes, they now boast that their growth forecast is slightly below consensus. If only the bank could reach out to its version from a year ago and tell itself, as we did at the time, how terribly wrong they were about the consensus forecast and how terribly wrong they were. They imply a below potential growth trajectory, which after all, the Fed is pursuing. This is the intended goal. You know, I don't think people really get this. They keep talking about wanting to tamper down demand. You know, they say it in the ECB, they say it in the US, the Fed. They want to tamper down demand. So what is demand? They want to stop you from buying as much things because they consider that the money moving around too much could cause greater inflation. So they want to stop you from buying things. So they're doing this by raising interest rates, they're cutting credit, they're lowering the amount of money that people have access to, that businesses have access to, and it's going to cause a lot of businesses to fail. This is a zombie economy that cannot take interest rates anymore. There used to be a time when they would have high interest rates, but we cannot do that now because of the amount of the corporations that are surviving solely on debt. It's not just the corporations either, it's our government. The U.S. government is surviving solely on debt. One of the main reasons they can't raise interest rates too fast is because it will completely and totally destroy this country. So what are we going to do? You know, Goldman also believes this recession is going to be necessary to cool the wage and the price inflation, to cool demand. They want us to be broke and to own nothing so that we stop having a demand for things, that we just want nothing. Oh, and yes, perhaps learning from its mistakes, the bank is also raising their unemployment rate forecast to reflect the lower growth path. They now expect the unemployment rate will move sideways to 3.7% by the end of 2022, versus their expectation of 3.6% previously, and then it will rise to 4.1% by the end of 2023 versus the 3.8% previously, and also the 4.2% by the end of 2024. So they expect this recession is going to keep going on and on and on and getting worse. And this was previously a prediction of 4%. In summary, Goldman says that while a recession is now inevitable, because before they said a recession was not their base case, it will be mild, which of course is this whole transitory inflation nonsense that they were spouting by every one of these card-carrying and wrong economists last year. There will be nothing mild about this coming recession. There's nothing mild right now. And on its own, the higher rates path and lower growth trajectory imply higher odds of a recession, a severe recession. Although the increase in recession risk is partially offset by an improving outlook for goods inflation and the recent declines in inflation, expectations that lower the chances that the Fed will hike aggressively enough to cause a recession. But it's already here. In addition, strong household balance sheets, the bank says, and an improving outlook for real income limits, it limits the odds that the economy will slip into a recession in the near term, and they are part of the reason why we expect that any of these post-crisis U.S. recessions would likely be mild. Nevertheless, on net, we see somewhat higher risk of recession following our forecast changes, and are therefore raising our odds of a recession in the next 12 months to 35%. Bottom line, we applaud, but Goldman is at least coming out and they're predicting that the Fed is going to achieve their stated goal of pushing the U.S. into a recession. They believe we're now going into a recession, and just 1 year ago, the bank was forecasting 4% GDP growth, also in line with the Fed's goal of this soft landing that is not going to happen. But just like last year, Goldman will be dead wrong again, because not only is the U.S. economy already in a brutal stagflation, but U.S. growth will be deeply negative as soon as early 2023, when the unemployment soars and the economy collapses, in keeping with FedEx's shocking warning that a global recession has already begun. As such, we now look for Goldman's next and fair, more realistic GDP cut, one which will see quarterly growth for the most of 2023 contract by 2% or 3% or more. This will serve as the moment to go long, with all margin available, for that's when the Fed will finally realize that the recession it's unleashed is anything but controlled, anything but mild. And it could well match the collapse of 2008, and that's when Powell and Co., they will panic. I love what Mike Hartnett says. He says, the markets stop panicking when the central planners start. And of course they're panicking. I mean, we're looking out at a stock market that's really not doing well. It's having some of the worst days that it has in history. And we also have all of these surveys that are coming out, the hard data showing, the soft data showing that the sentiment in the U.S. is terrible. That everybody already believes a recession is here, so it's just nonsense to assume that it's not. But overall, I mean, we've already had two quarters of negative GDP growth, and we're looking like we're going to have another. So this is coming. This is here. Or like I did in that video the other day, I explained that they were all coming out and trying to cause this panic once again. So I thank you guys for stopping by and joining us. Make sure to leave a comment in the comment section and like the video. It helps out the video and helps it to get seen more. And I thank you, as always. Stay free.